Good morning. Yesterday was Dan calls it sometimes, and not in the way he usually means to say it, but a something day. It was something, but we usually use that term from the perspective of a trading setup, like a bottoming happening and whatever. So yeah, so look, the gap up was tremendous. It was kind of obvious as to that it would bring in some selling, any longs. I certainly didn't think that it would fill the gap, and some of them did. So the selling started, and it was continuous. So this market this year has certainly been one of schizophrenic. I've used that term for a couple of years, but this year definitely more so. So just different perspective here of what we look at and others. The yield curves. I mean, look, I don't know how anyone was in denying of this and this recession. Yesterday spoke about the conversations that have been had about the consumer, and it's interesting. Well, what the media says about things and how they rationalize what they want. I guess we all do, right? If we're in a bad trade, rationalization is our enemy as traders. And the things that we would use on a day-to-day basis and month to month, all of a sudden we begin to rationalize why it may not work. And yield curves have been something that have worked for decades. And they're deeply inverted, as you all know. So 10-year down here and forming potentially a W type of a bottom. We'll see if this actually turns out to be a red bar ignored. It's in the support area and whether it begins to turn back up again. And you can see the rejection of the prior high on SPX here as this came down to the low. So until proven otherwise, I guess we're going to just look at this as being inverse relationship to be in effect. As you can see, began to top out. There was the bottom in the market. And as this began to move down with some momentum, well, S&Ps really didn't move up in one momentum. They just maintained up. It was just a giant mess. And then there was the Fed comment day, and then back down. And then more good news that got rejected. And so now we've got a very key line in the sand, meaning those lows. And, on the upside, a key, resistance area that if it gets above that, with this kind of price action, it definitely shakes your confidence as to press the button because so many whips. But look, if it can get above the high of that red bar, there's nothing to stop it from going up. And if it can get down below this 3,900, I think it can go all the way back down here. Now, I would kind of discount the possibility of that happening before the end of the year, but who the heck knows? You got this level down here, and so we've got this trading range right now. And a line chart of SPX and putting into perspective, gap and crap type of days or gap and go, call them whatever you want. I think it was last week, just mentioning, you try to come up with some kind of a forecast as to what's happening. And, based on yesterday's gap, that forecast, if you remember, I was talking about the potential for a head and shoulders top. And when this got negated, I was like, well, that ain't much of a right shoulder. And then it flips back up again. But I mean, this is still a possibility. Just need to see whether this will roll back over in the same area. It's got to break those lows there. So until proven otherwise, we just got this trading range going on. Look at it in a bar chart, look at it in a line chart, but looking at it in the bar chart or in the candlestick chart, and we see this big red bar. And the reason I'm pointing that out is when we look at the candles, they show us pictures. Those pictures produce thoughts, which create beliefs. And one of the reasons I do look at this line chart is just to put in perspective on a day-to-day basis of the close, what's actually happening here. Because I've seen big red bars get negated as well as any of you have. So what happened yesterday? Things went up. Let's forget about that they crapped out at the high. They got rejected at resistance, but they went up. So it isn't, like this all out bullish situation. We've got interest rates down here, potentially flipping back up again, which the market hasn't liked. We've got the dollar down here on the support level that starts to go up, and the inverse relationship with gold. And so as I look at this picture, as well as the market internal gauges here, it's like, I still don't really know which way this thing is going to go. It's in a trading range. So as we look at different market internals into market analysis, price patterns, and such, do I come to a strong bias about what's going on here? And we don't. Right? It's trading range. It's in the middle of the trading range. I don't know which way it's going to go. Buyers seem to want to buy they buy the dip even after deep retracements. You can see this broke this support here, but they bought the dip anyway, and they sell the rallies. And that just leads to what truly is happening is uncertainty. And it's the end of the year and things are erratic. And so we keep that in mind and keep ourselves in perspective of what's happening. Same line chart on a weekly basis, held this support. Here's my alert, this little thing right there, and other levels there. And if it can get above here, this is SPY, it looks like it can go up. Well, of course, it's got to get above there, or it's got to get below there. And until it does that, we're the proverbial frog in the blender, unless you're very nimble. Nothing wrong with being nimble. But, it requires, trading from smaller time frames, or you just choose to do nothing. Right? Daily time frame, which we were looking at over there, and you can see, as it came down, little retest, popping back up. It was up here in the morning. I think it was actually we can see, right? You can see where it was. It was actually above those highs and came all the way back down. So pretty impressive as far as giving it all back and coming down into the gap fill there. And so now we've got these pullbacks into support. Where can they begin to flip back up? And the psychologies of the patterns is one in which, look, we all saw what was happening. So how confident we are to buy this kind of pullback here, into this area? Well, if we see a pattern and we see buyers stepped up here, and this was just a mess yesterday afternoon, it's flipping back forth here. It looked like it was ready to go up, and then it got flipped back down. Can it get through the low of the day? Would it get more ugly? No, it flipped right back up again. So buyers are willing to step up into this area of the gap fill on SPY. And where are they at right now? Pretty much unchanged. I changed that little gray color. I usually have this in a grayish color to signify that it's pre-market. Anyway, there's just nothing going on. Everybody's waiting here, whatever will happen here first thing in the morning, and then we sit there and wait for the Fed to do whatever they're going to do, see if they can surprise anybody. Futures pretty much unchanged, big topping tail of rejection. Can it pivot off of this and try and go up? And then 2:00, everybody hits the sidelines and waits for the jiggles. And SPX, I didn't even look because the numbers worked yesterday. And let's see what's down below. Maybe there's a no-brainer. You'd want to be below 3,900. and it's there. 38.80. You'd have to be out, I would say, before that time. So personal choice, but 38.80 is far enough away. Yesterday's range, things increased considerably. With that. Sell an iron condor. $39.45. Into December for today. Why so close? 39.40. Okay, it's pretty far away. And 41.05. Only 5 wide. Oh, I see. I get you. I get you. Well, that's a perception, meaning only 5 wide versus 20 or 30 wide, which clearly if it hits you, the risk is tremendous. But the whole idea behind doing these credit spreads 20 or 30 wide so far apart is the probability of them getting there is pretty darn slim. But I'll just post this for those in YouTube that want to consider it. But typically, I would say I get what you're saying as far as staying within that range today. I'm just looking at 41.05. That's pretty close. 41.05, 41.10. You have to think that it's pretty much going to stay where it's at here until 2 o'clock and 39.45. Well, that one is better. 50%. All right. I can see it, but if this breaks this low, it's a little, and you're making out on the upside. It's the whole idea with an iron condor, right? You can do both sides, and if one side isn't working, you're making money on the other side, and then how much you can control the other one to limit the damage. I'm just trying to perk up here a little bit. Yeah. Yeah, I don't like to think too much, McGrath, what you were explaining to me the other day at dinner. I was like, I gave you the over my head sign. It's like, I don't want to think about it. Oh, it's got, I keep it simple, stupid. Not that I'm saying I'm stupid. It's just that simple concepts. But I get the idea of an iron condor. It's just this thing, when it starts moving, it can move with a vengeance, and even very short-term moves, those premiums move a lot. So, all right, NQs, pretty much everything's going to be the same, doing nothing here. Everything gave it back. The Dow came back in, but again, if you look at this on a closing basis, it went up. It's just stalled at resistance here. So, it's at resistance on the weekly chart. It would make sense to roll back over, but we're getting this red bar ignored. And hey, if the end of the week, this is a topping tail with a big tail, we'll be talking about if it breaks the low next week, we're looking lower. And it's like going into the end of the year here, is the market going to fall apart? It's unlikely. Historically, it's just unlikely. And Russell, same story. It was up there at resistance. It got rejected. Pivot, look to the left. It's trying to hold here. Factory work. Yeah. Bitcoin working its way up to the 50 MA. Sell setup still in the lower half of the red bar down there. We looked at the dollar. Silver, so a grinder. It's got room to go up there. Just whippy. You know, just patterns like this is like, okay, that's a buy setup. What do you do with this? For me, I'm getting whipped out, you know, and then it whipped back up. You know, it's just that's kind of the patterns that have been this year. This kind of erratic price action day to day, and crude oil flipping up here, you know, coming down and to form the next sell setup, and you know, be nimble or a is SPX. Oh, SPX. Okay. Yeah, I didn't flip that to SPX, but you know, when I'm saying the numbers, if you're looking at SPX, you know what I mean. Sorry about that. So that 4105. It's up. Okay, it makes a little more sense to me. It's up all the way up there. 4105, 4110, and 3945. It's reasonable. I think that it would stay within that range. I get it, but hey, if you can close it before 2 o'clock, certainly that would lead to a little more or less distress if things got crazy. So, rip retirement. Yeah. So, well, yours, Dan. Dan, you there? I know he's working on. He's got his new computer.
It's don't get me started. It was all ready to go, and then the stupid Yeti outlet won't go in. So now I had to come back to my old computer again.
Wow.
Unbelievable.
Maybe you need an adapter.
I have an adapter. It won't fit in, so I'll take it to a computer store later.
Hmm.
All right, let's see what we have. We have extremely light inventory. We did a great job selling strength yesterday, and even the shorts that went against us, we got that incredible retracement and got pretty lucky of getting out in the gap fill. All right, let's see what we have here. These are earnings. Pre-market. But yeah, as I said, I think it's going to be boring as can be here. I mean, maybe things you get a nice day trade into 2 o'clock because people might start a rumor or whatever, and then the computers chase each other, but I'm surely not going to do any new swings. So let's see, this is gapping down to 43 as a void, call spread candidate. Breeze, I see one print 27. We'll come back to you. Light volume. It's kind of a sloppy buy setup with a 1, 2, 3 on the weekly. We'll come back. PHX. No, I think trade's crazy. This thing down looks like a short, but I don't like shorting cheap stocks. RevG up a little bit, 14, but the resistance. So, I always like talking about today's session, multiple time frame alignment, which is fabulous topic. And I mean, we got tons of examples where they're all in alignment, like our Intuit that we did, and a couple others. So this one is not in alignment. So watch. It's gapping up to 1423. I mean, it held to 50, but it's gapping the resistance. The weekly is a bear 1, 2, 3, and the monthly is a bullish consolidation after a wide range expansion bar. So do you see how all these time frames they're conflicting, which is okay depending on what time frame you're trading. So look at this Intuit. We're in this. We did the chart of the week on this. I sent it out last Saturday, so go look at it if you want. A beautiful consolidation, bottoming pattern, 2050 curled up, 1, 2, 3, closing breakout. So we bought the 1, 2, 3, but notice weekly and monthly are in alignment. You know, no follow through to this red bar, major support, breakout, double bottom monthly. I mean, if the market rallies, this thing can go to $500. So we sold 1/3 of our position yesterday in the strength. Here I wrote down a couple others. I'm gonna type them here. Give me a second. Myrna charter, because I had these in the other computer. Now I got to retype them here. KYMR is a bio. MX kind of sounds like a bio to me. PCG right here was on our list yesterday. That's a 1, 2, 3 with a gap down negated yesterday. Milgo. I'll come back to these. I'm just typing them out. Door IBM was strong yesterday. And RIVG we just talked about. All right, that's an earnings one. So IBM, look, daily, weekly, monthly, all in alignment. That was a 3-week bullish consolidation and broke out yesterday. So there's going to be a number of patterns like this that could slap back down, but I'm going to keep them on my watch list to see if they can stabilize. So today's Wednesday. It needs, without a doubt, to hold Monday's low, or even this 15-minute pivot from its late day breakout. And let's see what it does. So a door. Now this one's not a great example of multiple time frame, but yeah, the monthly's a big mess. But the weekly has a void. And it broke out, had a gap breakout. Let's see if it can come in for the next 1 to 3 days and give us a new setup, whether to go long or this will be a no-brainer. $71 out of the money naked put. I always like watching hotels. Look at a Hilton here, Alex. Look at this rising 20 above the 50. Look at weekly. So there's nothing to do now, but again, let's see if it can simmer down and chop around for a couple days, and I'd want it to hold roughly 98.50 on a pullback. Milgo, I don't know. Wow, look at this thing pre-market yesterday. Pity the fool who paid $70 for this in pre-market. Look at that. That is such a picture of greed and just chasing a frenzy without any freaking knowledge whatsoever. This thing rallied from whatever, $10 to 70 and change, and some clown bought it up there. And then here the market open and then kaboom. Wow, that was a bad day for somebody. And it was a good day for others who got on at $10, provided they got off, of course. All right, so this one, beautiful 20 above the 50, rising 200. Breakout on the monthly. So all time frames are in agreement. Ah, I just realized what PCG is. That's the that California utility that almost went out of business because the lawsuits over fires. But that it looks good. They're all in alignment now. Now, PDT, I see one gap here at $14, but I need more. But if this does gap to 14 and change, and it holds, then that could be a 30-minute high trade. As a nice little shock gap. MX here 203, so gapping up here. Weekly, monthly are in agreement to go higher. There's just no low risk entry right now. This is low volume. I'm just gonna delete you. This has to be a bio gap in $35. But if it holds, it has room to 40 on the weekly. ABM gap, we looked at this one. This was an earnings one, so that looked like the day trade short. DDOG. So it's a bottoming pattern. It's just a watch. Still, it's a watch. It's a bottoming pattern is all, and put spread. Yeah, looks great. Simon Property. Okay, so that's not the hotel. What's that other SP? There's something that sounds like SPG, but it's a hotel chain. Which symbol is that? But yeah, Simon Property. Yeah, I've been reading in the journal that a lot of REITs have had huge withdrawals over the last couple months. But this looks great. That's bullish consolidation. I like it a lot. In both computers. All right, Myrna had a nice, that's a pro gap. It was a breakdown and gapping above 2 red bars on volume. And that is definite watch, provided it doesn't retrace too much. I'm going to put that in a window. Charter. Wow, gap again. Wow, that's some pain. I'm going to put that in a window. That's ugly, ugly gap. Wow. Wow. That was bullish consolidation. A day later, it's bearish. W, I'll watch. It's one of these trading range bottoming patterns. But weekly, monthly, if it can break out, has a lot of room above. Look at that M top on the monthly. Wow. That was a core short. All right, perfect timing. I got through everything there. Pins we were looking at yesterday. Nice weekly, monthly. Weekly, monthly has room. So pins and that is amazing relative strength for it to hold in the upper third of the day's range with the market selling off like it did. Let's put that in the bottom right here. That looks great. Intuit we're in. Myrna we just looked at. Etsy. Double bottom here in the monthly. That's going to take a couple days to line up. Ring is on my core watch again. I just want him to chop around for a couple days. We got to get through this FOMC. There's the PCG 30-minute high, maybe. ISRG has been bullish as can be. Wow, look how clean. If this closes right here, That is a bare 1, 2, 3. Is that all-time lows? No, but pretty darn, well, it might be. Or, yeah, it is. It is. It's $5, $6 under all-time lows. That looks horrible. And Bitcoin is rallying. Bitcoin's almost 18,000 now. And this is not rallying with it like it should.